Good morning. I'm Peter Milios from the Finance News Network. The Dow Jones Industrial Average fell on Thursday and snapped a three-day win streak after the release of hotter-than-expected US inflation data that sent Treasury yields higher, while Nvidia shares were under pressure. The 30-stock Dow pulled back 137.66 points, or 0.35%. The Nasdaq Composite fell 0.3%, while the S&P 500 slipped 0.29%. February's Producer Price Index, a measure of wholesale inflation, advanced 0.6% last month. Excluding food and energy prices, core PPI climbed 0.3% in February. Economists polled by Dow Jones expected a 0.3% gain for headline PPI and a 0.2% increase for the core reading. Stocks were initially resilient following the report, but lost steam shortly after the open. The hot inflation report sent bond yields higher, with the benchmark 10-year Treasury adding 10 basis points to 4.29%. Shares of Nvidia were lower for the fourth session in 5, pulling back more than 3%. The PPI report is the last major piece of economic data to be released prior to the Federal Reserve's upcoming policy meeting set for March 19 to March 20. Some analysts believe that if the Fed exercises patience and allows a tighter monetary policy to take effect, further easing in inflation is likely. However, there is a warning that cutting rates too quickly could lead to a resurgence of inflationary pressures. The uncertainty surrounding the timing and pace of rate cuts is evident in both the markets and the Fed's stance. Investors were buying major technology shares such as Apple and Microsoft on Thursday. Trading platform Robinhood popped 5% after the company reported a 16% increase in assets under custody in February from the prior month. Troubled electric vehicle startup Fisker tumbled nearly 52% after the Wall Street Journal reported that the company has hired restructuring advisors to prepare for a potential bankruptcy filing. Iron ore prices, influenced by China's economic prospects, neared US $100 per tonne, pressuring high-cost producers. Weak steel consumption in March led to a further decline, with spot prices reaching US $102.55 per tonne on Thursday. Analysts suggest non-mainstream producers may face losses at US $90 to US $95 per tonne, while major producers might cut below US $75 to US $80 per tonne amid ongoing challenges in China's real estate market. The global decline in lithium prices is causing Chinese producers to reevaluate their production and expansion strategies, with Rystad Energy lowering forecasts for both China and global mined lithium output growth in 2024 due to a reduced demand, leading to production shutdowns and job cuts. Turning to US sectors, energy and communication services were the only two sectors that closed higher overnight. Real estate was the worst performer. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.7% fall. Thank you for listening and have a great weekend.